What up YouTube, it's Louis here bringing you this cryptocurrency video. Today for Solana. Looking at Solana, I think I made the video the other day when we just got back up into here, and I said on this day actually, and I said we're gonna potentially break out, and then if we were to get above $145 and hold that as support, then we could take a trade from 145 to here, and that trade would be a 45% trade. However, before I said what could happen is that we get rejected from a 145 and come back down to here and bounce from here and could double bottom here and then carry on up and then go to our target. And literally that's what's happened. We got rejected at 145 and now we've come back down and exactly tested the previous resistance now as support. You see here, you see over here, when we broke out of this falling wedge, which is a bullish target with the target way up here, we faked out a few times. We got outside but failed to hold outside. But you see when you come over here, you fail to go back inside. So this is very, very positive for the chart, because every time before you just kept on breaking back under, but now it's decided, now I've had enough, I want to break out and I want to stay outside. This was being held as resistance and now is being held as support, and that's confirmed by the wicks going downwards, meaning that I was inside here, but before the time ran out I closed out there. Same again, this current candle, the current 4-hour candle that closes an hour, is also holding that perfectly as support. So what happened over here, we'll go to the 1 hour time frame now. So what happened over here was, I guess, everything's determined by Bitcoin. And what happened today? The China FUD, as I mentioned in the Bitcoin video before. So a pattern played out, and this is called the double top, basically, where you go on like a sort of M basically, and you have a neckline just like your W. You have a neckline which is 145, because we're using the psychological number, round number 145, and then yeah, so your technical target would be measured from the top back to the neckline, and then your target's down here. Now you can see target was met and you came down lower. So although the target was just down here, we knew anyway once you broke this you want to come back to it, and that's what's happened. And you're still higher than the previous time. The last low over here is here, and you've come back to it and potentially formed a double bottom here, and this would be your neckline. So if we can see the level of 150, let's call it, let's say, if we can see $150 break, let's bring this down actually, let's say if we see $152 break, then we potentially got a humongous double bottom. Actually, we'll take it from over here, but now we can take it from down here. We can. So if you break above here, you got a technical target to over here, and if we look to the left, structure these clues, you can see this is a swing high before we came down, found a swing low. That's where we got rejected from. So I'll go into this, but I'll look into this after with you. Yeah, so resistance, you come down, found support, broke above resistance, new swing high. You should have came to this, but then you come down to here. So you want this level to hold basically. Let's go on the higher time frame now. Okay, so there's more to this chart. Okay. So we also have this. No, let's do it. Yeah, so basically you had this thing called a descending triangle. Ignore this for now. So you had this structure basically. You're coming down and you have this horizontal support, and you're getting constricted between these two until you're forced into a move. You come to the apex and you're forced into a move, and this is a descending triangle, so your technical target is to the downside. So your target is from here to here, and that's saying, whoa, your target is very low down. So your target is down. Let's get that exactly. So on the breakout here, so yeah, that's saying around $90. So what's happened at the moment is you've broken out, then you've broken back in, invalidating the pattern. then you broke back under, so this comes back into play basically. And then you've come down and you've come to a key level of support and you've had a massive bounce. But you're testing now. When you got rejected at 145, this is not good. When you got rejected at 145, you're basically back testing the previous support of the descending triangle now as resistance. So you confirmed it as resistance. Now you're in a confirmed downtrend. However, what is positive is that with all these fake outs, in and outs, and this downward move here, is that we created this bullish pattern that we actually managed to hold. And we actually broke down below it, which is very negative, because with a bullish pattern, I think this one you've got a 65 or 68% chance of breaking to the upside and 32% chance of breaking to the downside. And it decided to break to the downside. So obviously, if you do break out of this, I think you measure from here to here, and that would be a technical target. So literally not positive at all as well. That's saying 83. But what's happened when you broke out? You didn't meet this target or the $83 target. You actually broke back above into the pattern, which is a bullish pattern, and you held it when you came back inside. And we've made a base over here. One bottom, come up two. So actually I'm going to redo this like that. So this would be a technical target to here. And then once you break this, that's your next one. That's your intermediate level before getting above that and heading to our target. So yeah, so you got rejected here, negative. After getting back into here, you broke out of this pattern, which is a bullish pattern. So your technical target now is 211. As long as we're outside of this pattern, this is your technical target. It's set in stone until it's not. If you lose support, it's not. But if you keep holding support and you stay in an uptrend, keep creating higher lows and higher highs, this is our target basically. So you see when we got rejected, which at 145, which is negative because you flip support into resistance, which means you may go down to here. But when you come down, suppose this is the bottom because we have bounced from here, then we won't go to here because you'd be having higher lows basically, which is an uptrend. So if we remain above this basically, or this level, then we should stay on course to this target, guys. Perfect. I hope you enjoyed this video. Make sure to follow the socials, leave comments and likes, and please subscribe. I'll see you in the next one, guys. As always, peace.